Roku, September 10th, 2019. So in this video, I'm going to go over a trade. So this trade happened on September 10th, 2019. Ticker symbol is Roku. This is a day trade, and the trade setup is it's an intraday catalyst play with price action confirmation. So first and foremost, let's walk through the pre-market. So this is how the stock looked pre-market. This is a daily time frame. So 8 a.m. Eastern Standard Time, about an hour and a half before the market opened. One thing I like to do is I like to start off by looking at the yearly chart. Now, before even looking into the yearly chart, the first question that pops up is, why is Roku on your watch list? Why is it on your focus list? Now, Roku is on my watch list because Apple has an event today and may possibly announce a streaming service, and this may affect Roku. So for anyone that does not know, Roku is a company that has streaming services. They provide TVs. So obviously if Apple comes out with a streaming service, that may possibly affect Roku because now Roku has competition from a very, very big company. So because of that, Roku is on my watch today because once again, Apple has an event. And since Apple has an event, this is a stock I want to watch to see what happens to the stock once the event kind of happens. Now, we start out by looking at a 3-year one-day chart. Now, this is something that you guys should always be doing. Whenever you're looking at a chart, you should always be starting off with a large time frame. Now, when I look at a large time frame, the whole idea is to understand what's going on, right? It's to understand critical levels. So if you look right here, around 160, I have a demand zone. You guys can see right here as well, around 140, another demand zone. Stock goes up, gets rejected, was resistance, had a hard time, and broke through, right? These are the levels that I have. Now, obviously, we're not just going to look at these levels on a yearly chart. Our next step is to zoom in. So what we're going to do next is we are going to zoom in. Now, when we zoom in, this is how the pre-market looks, right? Now we are on a 15-minute time frame, meaning each candle here represents 15 minutes. Now, when we look at this chart, what do we see? We see that this is happening pre-market. Now, what time are we looking at now? We're looking at about 9 a.m. Eastern Standard Time. So we basically have 30 minutes till the market opens. Now, the stock is down 2% on 150,000 shares. So obviously, that's a good amount of volume. Now, if the stock was down 2% on maybe like 10,000 shares or maybe 1,000 shares, I wouldn't really care. But this right here is a healthy move. Now, as I mentioned before, Roku is on watch today, not because of being down 2% on 150,000 shares, but more so because Apple has an event today, right? But this also amplifies it because now we know that this is being watched by other players, right? Now, another thing with Roku is if we look at price action, we can see the stock is breaking a critical support area around $160. Now, that's a very, very important thing because you guys can see around $160, that was a major demand zone and a resistance level. If you guys take a look on intraday, you can see stock goes up, gets rejected. After hours, pre-market has a very hard time. On the first hour of the opening a few days ago, it also had a very hard time. The next day, it dipped into that zone again, bounced right above it, and then yesterday, it went right into that zone and held pretty strong. So right now on the open, Roku is looking pretty weak. So as of right now, even if Roku did not have any catalyst midday news coming up that we're anticipating, Roku would still be one of those stocks that I am watching. I'm still looking at this stock because obviously it is breaking a critical level. Now, beyond it even breaking a critical level, another thing with Roku's chart, before I break this down, if you guys just look at this concept right here, you guys can see Roku has been running like crazy, right? So seeing a pullback or seeing a small sell-off is pretty healthy. So even if we just see this and seeing it pull off to maybe 150 and a consolidation could be a quick short play or a quick opportunity for us to buy puts. That's if there was not any catalyst. But once again, going back to this trade, we do have catalyst. We are anticipating catalyst. Now, the next thing we always want to look at, and with Roku, it doesn't fully apply because once again, we're looking at the catalyst aspect, is market internals. Now, if Roku, right, did not have the midday catalyst that we're anticipating, market internals would be extremely important to understand what direction the market is going in. Now, if the market is selling off or the market looks weak and Roku is also breaking a critical level, this play would become a lot easier for us. But once again, market internals are not going to play such a huge role because if Apple does announce streaming services, we could see a possible hit on Roku despite how the market internals are looking. But what we're going to do, we're still going to look at them because as we're going through our pre-market process, we want to understand the market internals and what's happening with the overall market before the market actually opens. So it's 9 a.m. Eastern Standard Time. We have 30 minutes to go till the market opens. So what do we see? We see that the markets are all trading sideways. So here we have SPY, we have ES, and we have VIX. Okay. Now you guys can see SPY pretty sideways, ES pretty sideways. Right now, VIX, for anyone that doesn't remember, we went over this in part 8. VIX represents fear. It showcases if there is fear in the market or if there's not any fear. Right? When the VIX goes higher, that means there's more fear in the market. When VIX goes lower, that indicates there's not that much fear in the market. This is also pretty flat. This is trading sideways. The whole market for the past few days has also been trading in a sideways channel. You guys can see no real move. A real move happened before, real move happened before, real move happened before. Now it is consolidating, okay? The next thing we want to see is that today there are no economic events or big news there to basically move the market. There are days where the market is anticipating some news, maybe at 10 a.m. Eastern Standard Time, the first 30 minutes of the market, there's some set of news that pops out, but right now there is nothing that's really happening, okay? So market is flat, market is pretty dry, but once again, as we look at this, our main focus is to look at Apple's event and see how the stock reacts during that time. So what is our game plan? So our game plan is pretty straightforward. We're going to tune into Apple's event and see if they release any streaming services, and if they do, how does the price react? We are anticipating Roku's price to go down if they do announce streaming services. Now, we don't know if they're going to announce streaming services. We have no idea. The only thing we're taking this trade based off is anticipation. Okay, not every trade you guys take is going to be similar to this. This is just one of the many trades that I have taken and that I want you guys to see how to approach if there is a set of trade that has anticipation or some sort of news or event behind it, and how to actually capture the move that's there. So now what we're going to do is we're going to jump into the charts and take the trade from there. All right, so right here we're looking at Roku's 3-year 1-day chart. As you guys can see, once again, solid uptrend. Yesterday I had a pretty rough day on nice strong volume. Now let's zoom in and just kind of take a look at all the levels. These are the levels we have established. I'm going to remove this level and just show it to you one more time. So right around here, we have a critical level. Now, obviously, this level doesn't have a lot of information because as you guys can see, when I zoom out, Roku has never been around this area before, which is why I'm only zooming in here. Now, right now, it is about 9:27 a.m. Market is about to open in about 3 minutes, so let's zoom in and check everything out. So if you guys take a look right here, we're on a 30-day 15-minute time frame before we were on a daily time frame for Roku. Now looking at this time period, you can see what happens around this zone. Around this 159, 161 area, Roku has an extreme hard time breaking out or breaking through this area. So automatically that becomes our critical level or critical zone, right? And as you guys take a look, once again, hard time around here, support, and now so far pre-market, Roku is at 157. Now as Roku is at 157, we're looking at the 1-minute chart, we're gonna look at a certain setup. So the way we are going to create a setup on this stock is, as I mentioned before, let me just set this up. Where is this? Restore cells. So right now I'm gonna open up a 5-minute and a 1-minute chart. Now, the reason I'm going to open up a 5 and a 1 minute chart is because I want you guys to see both hand in hand. Now, when I'm day trading, once again, I like to have the 1 and 5 minute chart open. I also like to see the candle close. Now, one mistake a lot of people make is if a 1 minute candle shows a strong green candle for 10 seconds or 20 seconds, people enter. Or if a 1 minute candle is red for 20 seconds, 30 seconds, people enter or exit or they panic. What you guys want to see is you want to see the candle close. You also want to keep in mind of what the time is, right? So that's also very, very important to keep in mind, right? Let me just pause this. So you also want to keep that in mind. So I have the 1 minute on just for more price action, just to see what's actually happening minute by minute. But I like to trade more so off the 5 minute, right? So keep that in mind, guys. Don't take on trades off 1 minute candle. You are going to kill yourself if you try to trade off simply the 1 minute candle. So once again, use the 1 and 5 and wait for a close on the candle and just kind of be smart. Just be smart when you guys are trading. So I'm going to play this on the open for a little bit just so you guys can see how it's trading. But the trade does not happen on the open. The trade on this happens around 1 p.m. I'll show you guys why 1 p.m. Remember, same exact reason on why we're looking at this trade. We're looking at this trade because of Apple's event, okay? So what I'm going to do is I'm going to change the timing to about 1 p.m., right? And we're also going to open up Apple's event. Now, like I mentioned, this stock or this trade is a little bit different. So I'm going to show you guys the price action concept first. And after I show you the price action concept, what I'm going to do after is I'm going to show you where I entered, where I exited, my trade outcome, and kind of break things from there. Okay, so now let's break down two things real quick. So right here, if you guys take a look, this is Apple's event. Okay, so about 1:18 p.m. is when Apple makes the announcement. So right now it is not 1:18 p.m. Okay, right now the timing is 1 p.m. exactly. So we have about a few minutes to go, right? So all we're doing at this moment is we are watching price action. As we are watching price action, we're just checking out what's going on and taking the trade from there. So this is the price action for the stock, and we're just gonna fast forward 3 seconds and see how it goes. Now also, as I'm trading, one thing I like to have open on my day trades is I like to have time and sales and level 2 open. I like to read the tape on critical levels just to know what's happening. So as I fast forward this, 115, I'm just going to fast forward to 115 real quick so you guys can actually see. So right now we are at 1:15 p.m. Okay, so this is the price action for the day. As you guys can see, price action is all over the place. So right now there's no trade. Let's just recap to our original game plan. Our game plan was we were watching Apple's event, and as we're watching Apple's event, if Apple showcases us any news of streaming services, we are then going to take on the trade depending on, obviously, price action. So once again, it is 1:17 p.m. Apple has not announced anything yet. We are still watching their event, and as we're watching their event, around 1:18, as I mentioned, is when they are going to show us everything. Okay, so we're 1:18 now. Now is the time. Let's just say you had the event open. Apple announces, hey, we are coming out with a streaming service. We are going to charge $4.99 a month. Okay, this is what our streaming service includes. It gives us all the information. Now, one thing a lot of people do wrong is the moment they see news, they trade. They're like, oh, I see bad news, I trade. When I see bad news, right, one thing I want to see is, let's say there's bad news that comes out. I want to see the stock react, hold, and then if it breaks that holding area, I then want to get in. I don't want to enter right away. Now, looking at Roku, just to add some levels and some clarity, we already know that right here for Roku is the low of the day. So Roku right now is around the low of the day, right? Right now it is 1:20 p.m. Roku is around low of the day. The streaming service news came out. You guys can see streaming service news comes out. High volume sell-off. Stock is consolidating at this current point. Now, what this is telling us, and this once again is where a lot of traders mess up, right? What a lot of traders do, I'm just going to pause it for a second. A lot of traders enter right on the news. Now, when you do that and you enter, you may be profitable for 10 seconds, 20 seconds, a minute, 2 minutes. But then if the stock tends to consolidate or hold and show a short-term reversal, a lot of people panic and exit. So a smart thing to do right here, and this is where you have, as a trader, you have to really, really recognize this move, is we see something very quick. What do we see? We see that the news came out, okay? Stock took a small hit. Now, after it took a small hit, what is the stock doing? At this 151 level, there's buyers holding this up. Now, this level is very, very important to us. Now, why is this level very important to us? So if you guys look here, low of the day, that's number one. That's the low of the day. That's the same area buyers are stepping in, right? And that's the same area where the bad news came out. Basically, Apple is competing with them. Stock dumps, and it still holds. So what we know is that around this 151 area, there's buyers stepping in. The bid is being held at 151 at the moment. So we're just going to watch that and see if this can continue. Now, if this can continue down below this, that could give us a possible entry, right? If it can continue and break below this, we can possibly get an entry. Now, if it doesn't break that, we really won't have a solid entry, right? So once again, let's just take some things away. One thing we don't want to do is we don't want to chase a trade. Right when a trade starts moving in our direction, we want to be patient, right? So we're being patient right now. Now, you guys can see it's slowly picking up. Right, as it's slowly picking up, looking at the bid, looking at the ask, basically looking at the tape is very important, because what tends to happen is as it's reversing, it looks like a reversal. A lot of people get in, but sometimes what this does, it moves down, has a small retracement, and then starts dumping. So what's happening with Roku, if you guys take a quick look, I'm going to pause this. What happens with Roku real quick is it hits the 150.20 area, has a short-term reversal to 152.5, has about $1 reversal up. And now if we look at the tape, you can see the tape is not that strong. You can look at the tape. Look at the tape, right? And as you guys look at the tape, you can see it flashes 152s, right? It flashes 152s real quick, right? Where's 152s? I moved way too down. Look, it flashes 152s real quick. And 152 is obviously not strong enough to hold. And since 152 was not strong enough, sellers stepped in aggressively and started hammering this down. And as sellers are aggressively stepping in and hammering this down, you can see the size. You can see how the size gets pushed down. You can see how buyers are stepping low, right? Let's keep moving forward. 152.2. As that happens, you can see quick move up and then quick rejection right below 152 again, right? That's showing us that sellers at this moment are a little bit stronger than buyers. Now, obviously, this is not giving us a trade idea. I don't want you to say, okay, I'm going to take the trade right here. My whole idea of the trade is if it can break this 151, that will be my first entry. Okay, if it can break 151, it'll give me a confirmation for my first entry. Now, obviously, I'm looking for a continuation play on this. And now the reason I'm not going to size up on my first trade, or I wouldn't look to size up, is because Apple's event has not ended. Now, usually, guys, when there's events happening, what you guys have to understand is the stock may still consolidate, not move as much as long as the event is going on, because people may think that, okay, something might come up, some good news, some bad news, something may happen. So it consolidates until it's like, okay, event has ended, right? So you guys are going to see that. Now I'm going to play it again and keep going forward. You guys can see, look what happens. We're at 1:23 p.m. Okay, it's moving. You can see no play right now. There should be 0 plays so far. No plays. I just want to see it break this level for my first confirmation. Why? Because this is once again the 1 minute candle. Okay, I don't want to trade off the 1 minute candle. I don't want to see a red candle and take on an entry. I want to see it push down and I want to see the candle close. I want to see it look strong. Once again, this is at the low of the day. Last thing I want to do is buy right here. Now, there's a second thing I want you guys to understand, and this is very, very straightforward, right? And you guys are going to see this in a second. Now, when you look at this play, what play do you think everyone is waiting for here? Everyone is waiting for possibly the same trade at this point. Wow, if it makes a new low of the day, enter. Now, as I mentioned before, market makers also see that. So what market makers do sometimes is they will create traps. Now, if they create a trap and it reverses and then continues, that itself will give you the highest confirmation. So sometimes when I see stuff like this that looks too straightforward, my size decreases. So I wouldn't be comfortable in taking the same size as something else. Now, if this was not a low of the day and it didn't look this simple, maybe I would have sized on the move down. But since it's the low of the day, since buyers stepped in, they held it, everyone sees the same play. Oh, if it makes a new low of the day, enter, right? So now watching this, right, we're watching, look what happens. 151.29 is the main area. I want to see what happens around that point. You can see the tape. A lot of the orders are filling around the bid. The ask is not getting hit. The bid is getting hit, showcasing that sellers are more aggressive, right? You can see same area again. 5-minute chart is still holding. I want to see this close, and as I see this close, I want to see the chart continue making the play. Now, a few things I want to bring to your attention right now. One thing I want to bring up is the timing. Right now, it's 1:29 p.m. Okay? It is about to be 1:30 p.m., meaning the next 5-minute candle is also forming, right? Now, that's very important because waiting for the candle to close or the next 5-minute candle to start and seeing how the last 5-minute candle looks is extremely healthy to understand the direction of price. Now, you can see the next 5-minute candle is forming. Now, I want to see what happens on this move, right? Remember, 1-minute candle. Looking at this 1-minute candle, the last thing you want to do is enter right here. Because if you enter right here, this is a straightforward play where a lot of people are looking to short, looking to buy puts, and then what happens is sometimes they get trapped. Now, for me to enter, I would want price to get a little away from this. Okay, now you can see the 151.2, 151.3 area is holding up pretty well. The moment it hit that, you can see the tape started showcasing aggressive buying for that moment, right? Remember, we're looking at a 1-minute chart. So if you see aggressive buying for 10, 20 seconds, does not mean that this is going to reverse. We're looking to trade on a very small scale. Minute has not even ended yet. You can see that same area is holding. There's a bunch of buyers here, right? Now, this is where the traps start happening, guys. Our job right now is to be patient. The more patient we are, the more money we'll make, right? Because if you're not patient in these type of situations, what tends to happen is you chase a play, and if you lose money, that destroys your confidence, and it makes it very, very hard for you to continue on making money. I'm not comfortable in taking a trade here, and like I said, I'll show you entries and exits afterwards so you guys can see. This is where most people are jumping right in. Like, oh, it broke, enter. It broke, enter. Right? No, I'm not comfortable with that. Originally, yeah, that's something we wanted to see, but right now it is in a very, very tight zone. Now, looking at this, you can see what you're gonna see what's gonna happen. Right? A lot of people are entering here, 1-minute candle. Like I said before, do not solely trade off the 1-minute candle. Wait for some confirmation, and you can see what's happening here so far. It's pushing down, right? I want to see the 5-minute candle close strong. I want to see this close very strong. If this can't close strong, then I'm not taking the trade. I'm not taking a trade based off a simple 1-minute candle breaking a straightforward area. Now, watching this, you can see 150, obviously a very critical area. 150, 140, 130, all around numbers, very important areas where buying pressure kicks in or whatever the case may be. Now, if you guys look here, if for the people that entered here, the moment they start seeing this green candle, they panic, right? And this is kind of also, you guys are also seeing, you know, minute by minute analysis, minute by minute understanding of what's happening to price, depending on how you're day trading. And like I mentioned, every stock you trade is going to be a little bit different. If you're scalping a stock like Roku, it's going to be completely different than maybe trading Seal or BPTH, any of those type of stocks. So having that idea and understanding is completely different, right? You can see still around this zone, right? Around this 150 zone. Around 150 zone, what tends to happen is you guys can see 83s, 81s, 84s, 75s. The ask is getting hit, right? So bulls and bears are pretty equal right now. No strong selling pressure, no crazy strong buying pressure. It's a flat hold right now, right? The trap already happened. You can see high volume, right? Holding, And you can keep watching. 151s are flashing. 151s flashing does not mean 151s are going to continue. But 151s at this moment are flashing. Now let's see where our trade would kick in. This is where the patience kicks in, guys. Because if you entered on this trade and you see this green candle, depending on what you're trading, you would have panicked. You would have froze up, right? Now in this situation, as I mentioned, depends on what you're trading. My trade on this was I traded options. I traded the 145 puts. That's what I traded. I traded 145 puts. Okay. Once again, if you trade puts, your whole idea is you're anticipating the stock to go down. You guys can see what's happening once again. This is a rejection area. This is the next rejection area, right? If the stock gets rejected right here and continues down, that's a simple textbook play. If it goes back up here and gets rejected too, we can see something similar once again. This is why when you guys see straightforward plays like this, be patient. Do not get trapped. A lot of people get trapped in stuff like this and they end up losing a lot of money. Now, as you're watching this, I also want you to kind of think about what you would do. Oh, I would buy. Wow, I see price action actually forming. I see how it's operating. I see what's going on. The time and sales is not accurate on this because I'm on the on-demand feature. But when you guys actually watch time and sales and go through more live trades, you'll see that sometimes just watching the bid and ask and seeing what buyers are hitting more showcases you direction. But the first thing you want to know is where the stock is going. Right now, the stock is on a downtrend, right? So if I see buyers getting aggressive, I don't really care until the stock can actually break this area and reverse because it is on, once again, a downtrend. So I want to see it break that area. I want to see it break the resistance zone. And then I want to see a strong buying pressure still there on the tape. If I can see that, that would then give me confirmation to buy. Right now, if I see strong buying pressure, which is what we kind of see, it doesn't really matter to me because that strong buying pressure is only strong buying pressure until maybe this area. I want to see the strong buying pressure. Once it gets in this area, stay alive. And if it doesn't stay alive, we know that it's possibly going to keep pushing down. So let's keep watching this. Let's keep seeing what happens. Like I said, 1 minute chart, guys. Don't panic off it. Don't react. Don't go crazy. Once again, if you see straightforward plays, be careful because that's where people get trapped. Okay, now once again, if I'm looking to buy this stock, that's not my trade in here. I'm looking to buy puts. I'm looking to short. If I was looking to buy, my buying play would be somewhere around there, right? On a nice downtrend, if it can break that 152.5 area, buying pressure stays strong, I will then get in. But at this moment, no trade. And this is where, if you guys are watching this, this is like one of the best practices to get better at reading price action. Just sit in front of your computer sometimes, watch price, and just analyze what would happen. Like, what do you think is happening? Do you think the stock is going to go up? Do you think the stock is going to go down? And why, right? Now, if a lot of people analyze the stock the right way, they would have saw like, oh, wow, it got, like, this was a solid trap, right? A lot of people got trapped. So market makers made a lot of people enter here, trapped them in, reverse price, and now those same people are exiting. So if it's a trap set by market makers, what they do is they take your shares here, take it here, and then push the stock back down. If they do that, we as smart money are going to now enter at a lower price. And you have to keep in mind that the event has not ended yet. The event is still going on, right? So the event has not ended yet. So let's keep watching this. Let's see what happens, just to see price action minute by minute, moving and so on. You guys can see. Still continuing, getting rejected. 5 minute candle going on. Now, if you guys see, this is simple price action here, guys. Move down, retracement. Move down, retracement. Now, some people, when they see stuff like this, they might enter here. There are trades I have entered my entry point there. But then there's also trades where, you know, just to get a high confirmation, you can enter down there. That's up to you. Now, a break below this is going to be a lot easier. Now, you might say, well, everyone else is looking at this trade here as well. Why not? Why wouldn't we get trapped here? Because when market makers are trapping people, this is where the main trap happens. So on the second move down, those same people are less confident. They're not comfortable in entering, right? So that becomes a strong move down. So if it breaks this level, this now becomes a stronger move, okay? If you guys take a look here, you can see what's going on. Now it's pushing down, and as it's pushing down, let's watch the tape real quick. You can see the bid is decelerating very, very quickly, and the bid is getting hit, showcasing that aggressive sellers are stepping in. New 1 minute candle forms, holds around 150. A continuation play here after a strong red candle would give us the first push down. Okay, that would be our first push down. That right there is now giving us some sort of confirmation, and that's giving us an entry point. So this could be the first entry point that you can possibly take. Now, like I said, everyone's going to have a different confidence level. Some people may want to see it break 149 and enter at a lower price point. I'll show you where I entered once again. Some people may now enter here because market makers have shaken people out. The streaming service news kicked in. Apple's event is also coming to an end. So this is where most people are probably entering. Now, let's just walk through this trade, and let's just say we entered around 150.5. If that's where we entered, our exit point should be somewhere around here. Profit target, once again, I traded puts. I'll show you guys that trade as well. Profit target for me personally would just be, I wouldn't set a proper profit target. It would just be, hey, if I enter at 149 or if I enter at 150, depending on where the stock starts showcasing a reversal, that's where I'm going to then exit. Right, so looking at this again, you can see strong move down, consolidation. Look at the volume there too, guys. And now also, if you guys take a look at the VWAP, one thing that I want you to notice about the VWAP, see how it's curving down? Now, that's very important because a lot of people overlook this, because as you guys by now should know, the VWAP represents the volume and the price, right? So it shows how is price reacting based on volume. So VWAP starts curving down. It's showcasing that as the stock is moving down, volume is supporting that move down. So this is obviously a clear and good, healthy sign. Now, obviously, if you guys take a look right here, this is where a lot of people panic. They see green, but like I mentioned, when people see a green candle, especially if it's a 1 minute candle, guys, don't panic. As I mentioned, it also depends on how you're trading this. The whole idea is if you're scalping it, your goal is to maybe capture a small piece. But if you're trying to day trade it, your goal is to capture a little bit bigger piece. But it also depends on what your approach is and how you're going about the trade. Now, just looking at the trade so far, as I mentioned, they announced the news around there. Stock is dumping. As the stock is dumping, what's happening now, it's that it's taking a break. So once again, we're going through the stock on a bar by bar analysis. Once we go through a bar by bar analysis, I will once again show you my entries and exit points so you guys can have a better understanding. But so far, I just want you to understand price action. Once again, stock falls to 148.6. It dumps nice and hard, and now it is consolidating. It is taking a break, right? Now, if it continues this move, which it is, you guys can see the bid dropping very aggressively. The tape hitting the bid, right? Showcasing that buyers are weak, sellers are being aggressive. That is showing us a strong sign on the downside. Now, if you're someone looking to take this trade, if we see a strong close beyond this point at the moment, I would take on the trade there. Also, looking at the 5 minute chart, that's something we don't want to forget. That also looks pretty strong and healthy. That showcases that this is dumping. Okay, now if you guys look at the tape, 148's a holding. Watch 148's not hold so strong after. You guys see the flash? And by the way, I have the speed up by 3x. So basically, this is going up by 3x faster speed, which is why it's moving very, very quickly. But you guys can see the 148's did not hold. Aggressive selling came in. Let me pause this for a second so I can show you guys the tape. Let's look at this real quick, okay? Now let's look at the 148. Look at the 148s and look at how aggressively selling pressure kicked in and pushed it down aggressively. Now, when I say selling pressure is kicking in and pushing this down aggressively, what I mean is that the bid is getting hit, okay? Now, let me set something up so you guys can understand. Let's say I add the bid, I add the ask, okay? Now I'm going to move the price down. Now when I do that, and I make this longer, what that means is that this moment, this was the bid, this was the ask. This was the bid, this was the ask. This is where the order got filled. So as you guys progress, you guys can see what's happening. So if you look at this trade right here, real quick, you can see that sellers are extremely aggressive. What is showing us that sellers are extremely aggressive? The buyers are at 147.9, 147.95, 147.99. The sellers, the people that are looking to sell, are at a higher price. So the buyers are at a lower price. The sellers are obviously at a higher price. But look at where the order is getting executed. It keeps getting executed closer to the bid, closer to the bid, closer to the bid, closer to the bid, consistently showcasing that sellers are aggressively selling their shares. And as this is also on a downtrend, as it's also at a critical level, that is showcasing us aggressive selling. That's showcasing that sellers are in control, and that's also confirming the strong move down. And other confirmations is obviously volume. Look at that volume spike on these strong moves down. Look at the volume spike go up, showcasing very, very strong and aggressive selling. That's what we want to see. And if you guys keep going through the tape, you can see over and over again. Buyers at 147.8, sellers at 147.96. The tape keeps flashing closer to the bid, sometimes even more closer. And as it keeps flashing closer to the bid, look at the bid continuously drop. The bid is not holding. You can see 85s, 80, 76, 76, a quick flash in 80, but it still fills on 80, right? 75, 70, 68, 68, 68, right? Keeps dropping. And as it's dropping, you can see the trade price is closer to the bid price. So these right here are aggressive sellers hitting this trade. You can see drops to 60s, 56, 55, 50, 53, 51, and everything is getting closer and closer to the bid, which is showcasing aggressive selling. So all we see here is aggressive selling. So this is confirmation. So you should have taken an entry point maybe around somewhere here, right? Or if you didn't take an entry there, another entry could have been somewhere here, depending on whatever stock you're trading, be it you're trading options, be it you're looking to short. If you're looking to short, right, just sell some shares here, or if you're looking to buy puts, take the trade there, right, or over here, whatever way you want to go about it. Now let's keep progressing. I'm gonna play it, and I'm gonna have it keep going. Now you can keep watching the bid and the ask, and you'll see the bid keeps getting hit, the bid keeps dropping. Now what makes people get scared is when they see a quick flash like this. When they see a flash pop in like this, they say, oh man, the bid just started going up. This is hitting the ask. That means that the stock is gonna go up. Guys, you have to understand, the stock made a strong move down. It's going to take a break. So seeing surges of green price, meaning aggressive buying kicking in, is pretty normal, as long as that price stays within here. And then if it continues, that's the play being exhausted. So that's totally fine. Don't let that panic you out. Don't let that scare you out, right? And that's something you want to understand as a trader. So when you do see this happen over and over again, like you can see 148, 148, 148, the ask getting hit, ask getting hit. We're on a 1 minute candle. No need to panic, right? These green candles are going to happen. They're going to scare you out, right? As long as it holds that area. If it doesn't hold that area, that's when I'm concerned. But as of right now, I like the chart, especially the 5 minute. 5 minute is still looking strong, right? This is just one candle out of a full 5 minute candle. So be careful getting scared out of these small plays right here. Now obviously if this can continue and obviously keep pushing lower and lower, that would be phenomenal. Now looking at the 5 minute candle, another thing I want you to know is we are at, if you guys look at the time, we are at, what time is it here? 1:53 p.m. So we have 2 more minutes until the 5 minute candle basically closes. And right now, it doesn't look like a bad candle. It can possibly continue on the downside. If you are in this position right now, an exit point would be somewhere around here, right? If it gets around there or above that zone, I would exit. If you haven't entered yet, I'd maybe wait for consolidation and then a continuation move to get the highest probability of success. If you did enter, stay in the trade, keep going through. Now, if you guys see stock is consolidating, it's holding. This is where we watch the bid, where we watch the ask, where we see where the orders are executing. You can see 57s are holding multiple times. 57s are holding, 57s are holding. Now we want to see how it keeps going. Boom, bid dropping, making a new low of the day. 35s, 36, 30s, 25s, all hitting the bid or closer to the bid, showcasing sellers are still alive. Boom, sellers are pushing this down more. A stronger confirmation. That's what we want to see. Look at the 5-minute. The 5-minute here, look at how it looks. Very strong, very powerful. And that itself should give you guys a clear indication that sometimes the chart looks very good, but in the long run, just because it looks good for 1 second or one green candle pops out, that should not allow you to panic and to get scared. And you can see aggressive selling. Look at the bid dropping so hard. As the bid keeps dropping, the orders are also executing at the bid. That is showcasing sellers are pretty aggressive, right? New 5-minute candle forms. This area holds totally fine. You're not going to see something just keep dropping straight. You're going to see a drop, a break, maybe another drop, another break, and that's healthy. So seeing this play right here, this candle, so far that's healthy. Now, me analyzing this trade from my perspective, I don't see an exit point. I'm already in the trade, and once again, I'll show you my entries and exits at the end so you guys can see. But so far, there's no reason for me to exit this trade so far. My whole thought process would be on this trade, hey, it's dumping. I would want to see a strong reversal. There's negative catalyst that came out, right, that Apple is going to come out with the streaming services. If we look at a larger time frame, once again, if anyone forgot, you can see larger time frame. It's breaking this major zone, which it broke on the open. Beyond that, it's also breaking this 149 area, which is also a critical level. So it's breaking all of these zones. Our next area that we really care about is 140. Okay, that's the next area that we really ultimately care about. But beyond that level, you can see this is just dumping over and over again. We're all the way at 146. This is just going down and down, right? So just a continuation move. Sellers are extremely aggressive. Watch the bid, watch the tape again, same thing. 30s are holding, 30s are holding, and watch it get flushed right down again, right below 30s. Sellers are being super aggressive, even on the 5-minute candle. Look at the plays. 146 is the next level, holding. Intraday level, holding. Boom, breaks at 145. Aggressive selling with a lot of size. Look at all the size. That's showcasing us a strong move down. Now what I'm going to do real quick, I'm just going to show you guys the full play here, and then I'm going to go over my entries and exits so you guys can understand the full play. But if you guys were a little lost here, didn't know what to do, or didn't apply yourself, I recommend you rewinding this video and going through this whole play once again and just kind of analyzing what you would do. Obviously, you see the play now, but I want you to understand what you would do on these green candles on the upside. How would you react? What are you looking to do, right? Now, let's just fast forward the timing. I'm going to make it go until the end of the day. So I'm going to make it go until when the market closed, okay? Now, if we look at that, let's look at this clean move here. Let's look at what happened, right? So what happened? Negative news came out, right? Stock flushed down, consolidated, flushed down, consolidated, flushed down. Look at where it held. It held around this 139 to 140 area. What area is that? If anyone forgot, let's go back to it again. 1 year, 1 day chart. Look at where it held. Guys, this is why it's very important for you guys to have your levels set out on the stocks you're trading. Because if you have your levels set out It's going to make your life a lot easier by knowing where the major zones are, by knowing when and where to take profits. Now, if you go through this simple price action and we just look at what happened here, you guys should be able to see. Clear move down, break of 149, goes down, retracement, goes down, retracement. Right here consistently traded sideways, broke that sideways movement, went right into demand zone, held it, and then throughout the day, some buying pressure, held it flat around 143. Now, obviously, what you guys need to keep in mind when you take on these type of trades, you're not going to perfectly, get in at the top, right, if you're shorting, and get out perfectly at the bottom. Your job is to find an area that gives you the highest level of success or the highest level of confirmation. Let's say that area is here. You buy puts or you short, and let's say you exit here or you exit, let's say here or here, wherever. You capture a small move. If you can capture that, that's great. But do not aim to get in here and get out there, right? That's just overextending it. If you can capture a small move, that itself is good enough. Now, as I was saying, if you look at this play, you guys should be able to see. After a while, it starts getting very, very messy, right? That's the 5 minute. That's the 1 minute. Look at the 5. Towards the end of the day, it gets very messy. But if you look at when the news came out, from there, made a move from about 152, 151, all the way to about 145. So a 5 to 6 point move. That is phenomenal, especially if you can capture that. And now the great thing about this move, guys, is the fact that we were anticipating the news, right? Now, it's different if this happened and we were not anticipating it and it wasn't on our watch list. But the fact that it was on our watch list, the fact that we had our game plan on, the fact that that worked out, that is showcasing this is a good trade. Now, obviously, it comes down to you just executing. Okay, so now I'm going to show you guys the entries, the exits, the option I traded, where I got in, where I got out, and what I could have done better. All right, let's break this trade down. So I traded options on this stock. I traded puts. Once again, for anyone that forgot, the whole idea of puts is you make money when the stock goes down. My profit on this trade was about $13,000. That's how much I made on this trade. Now, the trade rating, I rated it a 7 out of a 10. Even though I was profitable on this trade, there was a lot of things I could have done better. And obviously in the moment, it doesn't look like, it looks like, wow, I did a great trade. I made 13 grand, I made 5 grand, I made 2 grand, I made $100, whatever the amount is. You start thinking that you did great. But in reality, the whole idea, guys, is not the fact that you made money, but how can you improve? How could you have maybe made more money? What could you have done better? Which is why, once again, I gave it a 7. Okay. Right here, I have my entry points times. As you guys can see, I entered 30 contracts at the 145 strike price. And then I added 20 more. This is the price I got in at. All right. Then I exited in 2 different positions. This is a screenshot of me in that position, trading 50 contracts of Roku September 13 puts, 145 puts. I don't have the order close picture, but if you guys go on my Instagram, Omar Ashraf Trades, I posted every single trade. I probably have some YouTube videos on these trades too. I didn't go and screenshot every single confirmation order to verify trades, just because making these slides and all that would have been longer. But if anyone wants verification, you can ask me and I'll gladly provide that as well. Right now, just going to the next thing, all entries and exits. I'm going to show you all the entries and exits, walk you through it. Now, the reason I gave this a 7 is I did not like my entry points. I didn't have the best entry points out there, right? Even though you guys see that it's a profitable trade and you're like, wow, you made 13,000, that's phenomenal. You basically made about 100% ROI on your trade. That's phenomenal, right? So I made about 100% on this, meaning I probably invested close to 12, 13 grand. Right, so ROI was phenomenal, but I think on this trade it could have been a lot better. Okay, another thing I didn't like is I should have added more to my size. I had a perfect timing to do so, and I did not take advantage. Now, the thing I did like about this is it was a great add to my watch list for the day. So I'm very happy at the fact that I was able to divert my focus on this stock. I'm very happy that I was able to connect Apple's event to Roku. That gave me somewhat of an edge. So the only reason I was able to even make money on this stock, even though it got a 7, is because of the fact that I was able to connect Roku and Apple together as a company and identify that Apple has an event, and that event will possibly affect Roku if they come out with any streaming services. So that add to my watch list was a phenomenal thing. Okay, now let's look at a chart and look at all these entry points with the timing. So this is the chart. This was my first entry. I entered 30 contracts. Now, what I think wasn't the best idea about this trade, even though it went down, was the fact the only reason I got in here is because of the streaming news. So the news came out, and the first thing I did, I waited a bit and I said, you know what? Let me enter 30 contracts. I think this will keep going down. I think Apple, being the competitor, is going to affect them. Now, on one side, the catalyst was phenomenal. What I should have done is I should have waited more for price action. I did not wait for price action confirmation. And if you guys look at price action, you guys can see it held this 151 area. So I should have waited for price action. So I have the catalyst, but the price action I did not have. I didn't have a confirmation on the chart. So that's one reason why I gave myself a lower rating. Okay, now first entry of 30 contracts. Second is my second entry was all the way down here. Now that I personally believe was not the best entry, even though I still capitalized on this play, right? I still don't think that was the best entry. This is my first exit, and that's my second exit. Now, just to break this down once again, what I think I should have done better is I think I shouldn't have taken the trade here, even though I made money. Cool, right? And this is a huge takeaway, guys. Even if you make money on a trade, right, you still have to go back and say, you know what, I made money, great, but I didn't have the outline that I wanted. I didn't have the confirmation that I wanted. So in this moment, I just got excited, the fact that I was watching the news, and once Apple announced it a little while after, I executed. Not a great trade. Better trade would have been here. Now, going in the situation I was in where I had 30 contracts here, what I should have done is I should have added more here. This is where I should have added more to my position. I should have bought more contracts, maybe 20 more here, maybe 30 more here. Now, let's just say I bought 20 contracts more here. Obviously, my profit would have been a lot higher. But instead of me buying here, which was also a very, very critical level, and I missed that, what I did is I ended up waiting and buying all the way here, which was not, in my opinion, a great entry point. I think two great entry points that I could have added was one here and two around here, right? I would have obviously made a lot more money if I did get in at those 2 points. But I got in right here. And right when I got in, a scary part was sort of a small reversal kind of happened. Now, my exit point, my first exit point, I really liked. I was actually very happy with it. Even though the stock went much lower, I exited around this point. Even though the stock once again went lower, I am pretty happy with getting in here and being able to capitalize on this move and also capitalize on that move. That I'm very happy with. So I liked my exit point. Now, my second exit with 10 contracts was around this point here. This is where my second exit point was. Now, the reason I didn't exit my full trade on my first execution is because I wanted to hold 10 more contracts, and I was anticipating that it would maybe go down further. So me taking 40 contracts off the table reduces my risk, and I have locked in profit at that particular time. That's why whenever you guys take on a trade and you're up, and on this trade I was up about 100% on my full trade, I would highly recommend take some profit off. Lock in profit, guys. There's trades I'm up 20%, 30% in a short period of time, and I lock in profits. This trades I'm up 5%, 10% very quickly, and I'm like, you know what? This is great. Let me lock in profits. So if you're up a lot on a trade, lock in profits, right? So once again, just to recap, not the best entry, even though I made money. Entry I think should have been here, and then I think another add-on should have been there. This ad was a terrible ad, even though it made money. Doesn't matter. That's what I think I could have improved. Now, if you guys see this, this is a great way to recap your trades. When you guys are trading in the moment, it looks great, which is why you should always go back. When you go back, you're able to see a better, clearer thought process and understand what you could have done, because what you want is you want to have your ratings at a 9 or a 10 where you followed your plan and you did everything perfect. And I have trades that I'm going to go over where I have a 9 rating but I lost 4,000, where I have a 9 rating and I lost 2,000, where I have a 10 rating and I lost 6,000, right? But then there's trades where I have a 5 rating and I made 10,000, right? So the rating isn't about making money or losing money, but it's about the execution. It's about following the plan. I followed my plan to an extent on watching this stock and knowing like what I'm gonna do if the news comes out. But what I didn't do is execute based on price action. Just another side note, if you guys look at the view app here, you guys can see pretty flat, pretty flat, pretty flat. That curve, like I mentioned below, confirms this strong move because it's showing that price is moving with volume, just to kind of bring that up, bring that to your attention. So this was my Roku trade. Once again, a profitable trade, 13,000. Could have done a lot better, but at the end of the day, the whole idea of trading is to constantly improve. Once again, if you guys want to go back to this trade on your own, check it out, go minute by minute, go for it, try it out, and take on the trade from there. So this is just one of the trades, and we're going to cover many more in the upcoming videos.